Hey, everybody. Thanks for joining. This is Glenn Setchfield, the VP of Marketing. For those of you that don't know DMI, we're a well-established 30-year-old boutique IMO based in Boston, where with us, your success is our success. So it's important that we build long-term relationships with those that we serve and find ways to elevate your practice by educating you on the products and the sales solutions that matter. So today, we're joined by our good friend, Alex Hill from Athene. Alex, it's great to have you here. I really appreciate you being here, man.
Of course.
Alex is going to walk us through how to power retirements with index innovations and technology. And there are a lot of enhancements and unique indices offering options you just might not expect. And if I'm not mistaken, Alex, we're also going to be even talking about an AI-driven index. Correct?
That's correct. Yeah.
Which is pretty cool. So I think there's a lot of really exciting stuff to unpack today. We also have our very own Derek Easton co-hosting with us. Derek is one of our annuity VPs, bringing over 15 years of experience in the industry. And before I hand it over to Derek and Alex, I just want to encourage everyone to engage with the surveys that we have during the presentation, and also ask any questions you have through our chat or Q&A function, and we'll respond to those at the end of the webinar for the most part. But if it's related to where we're at in the presentation, we may just take a moment to answer the question during the presentation as well. So we look forward to that engagement. Thank you for being here. You got any thoughts before we kick things off?
Yeah, I'm excited to be here. As Glenn mentioned, I'm vice president of annuity sales, so I help agents and advisors such as yourselves every day to best assist your clients. And one of the common things that I often hear is, what's competitive out there? Which indices are performing the best? Which annuities are performing the best? Athene has always been a valued partner of ours because they're always constantly innovating and trying to be competitive. And so I applaud all of you for being on this webinar. I think you'll get a lot out of it. I think you'll see, if you haven't looked at Athene in a while, I think you'll see that you probably should, and I would be happy to help you. I'll be reaching out, or a member of our team will be reaching out if you have any questions or would like more information afterwards. But the offerings, the indices, the different products and solutions that Athene brings is definitely an arrow that you'd want to have in your quiver, and one that you'll want to be utilizing if you haven't already. So with that, Alex, we're excited to hear from you. I think I think we'll get a lot out of what you have to share.
All right. I think that's me. My headset turned off mid-speech there. Sorry about that, guys. If that is me, thank you for being here. Thank you for having me. I'm going to load up the presentation here. We can get started. Just like we said, if you guys have questions, throw them in the chat. I'm going to try and take a kind of a break in between each little section here, if you will. And we can go ahead and get started here.
Thanks, Alex.
Sir. All right. I'm going to assume everyone can see my screen at this point. This is going to be our Athene Index refresh. At the top here, what we're going to do is we're going to just cover some things, who Athene is, what we do, and how we do it. So let's go ahead and get that started here. So first and foremost, we've been #1 in FIA sales for the last 3 years. It's a pretty big feat, and we've really been able to do that, not just with one product driving all of our sales. We've actually had 8 different products with over $1 billion in sales, with only one of those being in the top 10 of all annuity sales. So what that really means to me and to us is that we're not just building it tall, we're building it wide. It's really important that we have a diversified index selection, diversified, FIA selection for what your clients need, be that accumulation, protection, income, or legacy. And the really cool thing about this is actually 75% of our index allocations are to alternative indices, which really goes hand in hand with what we're going to be talking about today. On top of that, this is just a quick look at us by the numbers. As you can see here, A-rated across the board, $246 billion in total assets. So financially, we are a very strong, very sound company, which is always a great thing to be able to go and tell your clients, hey, the company that we're working with here, they're going to make sure you're well taken care of. They're going to make sure that your money is well protected. So again, it's just another thing to put your clients' minds at ease. We were a startup just back in 2009, and to go to #1 is a really exciting deal. And we've done that through product innovation, our efficient operating platform, focusing on customer value, and a couple of other things here. And here's been some of our other reasons for growth. Well, first and foremost, our partners. We couldn't do it without, the likes of DMI and our distribution partners. And DMI is one of my favorite groups to work with. They are always fantastic and, on it. So it's always great when I get to get partnered and, actually work with these guys. On top of that, like I said, we have creative product solutions no matter what your client's needs are, income, accumulation, legacy, or protection. We do have a solution for your client. But, obviously, me, Mr. Athene, I'm going to come up here and say, hey, I think Athene's pretty cool, right? So I thought I'd bring some, additional proof here. We have won some great awards from the SRP Americas Awards. We won Carrier of the Year in 2021, Hedging Team of the Year 21 and 22, and FIA of the Year 19, 21, and 22. The one I really want to spend some time focusing on is that Carrier Hedging Team of the Year. If there's any basketball fans on right now, what I like to associate the Carrier Hedging Team of the Year with is that sixth man of the year. It's the guy who comes in off the bench. He maybe doesn't get all the credit, the glory that he deserves, but without that guy coming in off the bench, putting in the hard minutes, doing the hard work, we wouldn't, that team wouldn't be as successful. And I think the same thing of that Carrier Hedging Team. So what the Carrier Hedging Team of the Year is it's all about how we're able to maintain our profitability, maintain our rates, and all those good things. So it basically means that without this team making sure we're constantly competitive, we as Athene wouldn't be able to be competitive. So if I could win one year in and year out, it would be that Hedging Team of the Year. And I really think it's a big win for us to be able to say that we have that. On top of that, we have fantastic performance and solid rate renewals here. You'll see in a little bit some of our index performance down the road. But on top of that, we have really great renewals as well. It's really tough to go out there and, you're going to offer your client 300% of this index or 200% of that index. And then all of a sudden, 2 or 3 years down the road, and all of a sudden that's down to 40 and 30. And the client's saying, hey, what the heck's going on here? I thought we were getting in at this rate, and these have been slashed. Well, we are really, really good at maintaining our rates. It has been something that has really helped us get to where we are to be that number one spot. So that is a great piece. If you'd like that, we can get that out to you after the presentation as well, showing our rate renewal integrity. But what we're going to get into now is going to be our FIA index enhancements, and really basically just our new indices, a quick look at them, why we would have new indices. So first and foremost, why would we have new indices? Well, we want to maintain that market leadership. It's tough to rest on your laurels, right? You want to make sure we're constantly striving and moving forward and making sure we can offer the clients the best value that is possible. The other thing is we really want to make sure we have a true diversified index allocation option out there. We want to make sure that however the market performs, we've got an index that will perform in that market environment, and making sure that your clients are constantly receiving positive credits, constantly seeing growth in their annuities. Because again, without that growth, all of a sudden we have those hard conversations. So this is just a quick look at our index lineup. You'll see on the top there, that's kind of our traditional lineup, what we've had for the last couple of years. Our AI-powered U.S. equity index, the NASDAQ FC index, the BNP MAD 5 index, and then, of course, the traditional S&P 500, kind of that bellwether index. Now, these three on the bottom here are 3 new indices that we've launched recently, and I'm actually really excited about these. They offer some great things, as well as they really kind of complement our current offerings. So on the left-hand side, what you're going to see is that AI-powered Global Opportunities Index, or AIGO. This is an advanced multi-asset exposure index. We have the S&P 500 FC index. That's going to be kind of a mirror of the NASDAQ FC index. So if you're familiar with that index at all, you should be pretty excited about this one. I know that I am. And then we also have the UBS Innovative Balanced Index, which is, again, an advanced equity and commodity exposure. So we've got some great indices where we're really trying to capture a multitude of different marketplaces. And again, make sure your clients can continue to receive positive crediting. So this is first going to be a quick look at that S&P 500 FC index. So again, like I said, this is going to be kind of a mirror of the NASDAQ FC index. So if you're familiar with that index, what this means that FC is going to stand for Fast Convergence Technology. And what that means is this is actually going to trade intraday as opposed to rebalancing, daily, weekly, monthly, et cetera. So throughout the day, this is actually going to rebalance from a cash to a leveraged position from the S&P 500. And what you can see here is we have an 11.5% annualized volatility rate. And this is going to stabilize those returns while being able to grab all the upside while limiting some of that downside. So if you kind of look at this compared to the traditional S&P, you can see that the S&P FC is having some great performance here. Now, this is, of course, back testing, but again, we don't we don't operate with, oh, hey, these all backcasted great. What we like to do is we want to make sure we truly believe in the IP or the intellectual property of the underlying indices that we're going to be working with, because we want to make sure that, hey, this is an index that's going to work, not an index that looks great looking back. Now, one thing you'll notice about all three of these indices here is the Sharpe ratio. So these are all going to have pretty high Sharpe ratios, which again is going to be a great fit, because it means that these indexes are actually created to fit within an FIA and not just an index that was created to, perform on its own naturally. This was created to be paired inside of an FIA where we can offer all that downside protection with the upside potential. Now, our other index here is going to be the AI-powered Global Opportunities Index, or the AI Go. And again, this is going to be very similar to our Apex Index, our AI-powered United States Equity Index. And basically, this is going to be powered by IBM's Watson. And what it's going to do is it's going to look forward using that Watson technology and diversify between 20 different ETFs globally. And again, with this global diversification is what's going to really allow us to, make sure we're covering all markets here and giving your clients some true diversification, not only, multitude of indices, but within this specific index itself. And again, you'll see that Sharpe ratio on this one is sky high, 2.48. And you'll also see that this has some great backcasting, great performance. This is another one we really, truly believe in, that IP. We've seen some great success with our Apex index, and, they've been some great partners with us. So we're really excited to, launch another one on our platform. And then the third and final is going to be the UBS Innovative Balance Index. And what this is actually going to take alternative data, and it's going to look at that data a little bit differently. So as opposed to, some standard data tracking this index or that index, what this is going to do, it's going to look at credit card data, railroad and shipping volumes, and then we're going to take that and use that as investment signals on how to kind of balance our sheet. And what we'll see here is there's two different factors or two different states, and then basically inflation expectation or growth nowcast. And then we're going to look for acceleration or stability or a slowdown, and then a high or low inflation expectation. And that's going to kind of dictate the index on how to diversify itself and how to balance itself throughout. Again, you'll see on this one, the Sharpe ratio is, again, very high. So it's a really exciting opportunity here because, again, like I said, all three of these indices were designed to work inside of an FIA and not just to work, next to an FIA. So that's kind of a quick touch base on all three of our new indices. I did say I would kind of stop off as we go along here. So do we have any questions on these indices that we just kind of covered?
We do have one question.
Yeah.
Have you tested the Watson asset allocation for risk reward?
I'm sorry, one more time there.
Have you back tested the Watson asset allocation for risk reward?
I'm not 100% sure that I understand the question here.
Sam, would you like to sort of elaborate a little bit on your question?
Tell you what, I'm going to keep on going. We can circle back to this.
And we have one more. Tom is asking, what is a Sharpe ratio?
Yeah, absolutely. So a Sharpe ratio, it's going to be one of the most widely used methods for measuring risk-adjusted alternative returns. So basically what we're going to do is we're going to compare the risk basically on a return for, this index versus something like the S&P. And the higher the ratio, the lower the risk effectively.
And then just to clarify, Sam is actually wondering if the Watson AI is dependable.
Yes, so the Watson AI is dependable. So that it's been, used in a multitude of, different applications. This is just another one that we're seeing some success with.
Great, and that's it.
All right, cool. Then we will keep on pushing here and get right back to it. All right, so next up is going to be picking indexes for performance. So I had mentioned earlier that S&P FC is going to be kind of a mirror of our NASDAQ FC index. And what we've seen is some really great success. So in 2020, that number one performing index you'll see here was the NASDAQ FC. It had about a 20% raw return. And currently through 2023, we're seeing that NASDAQ FC with a 17% raw return. Now pair that with, the participation rates that we're offering on some of our products. It is a great deal. But the real thing I want to focus in on this page is you'll see that year in and year out, we have indices that are in the top 5, in the top 10. Our indexes work year in and year out, which is a really big deal. In 2022, there was only a total of 8 indexes or 8 volatility control indexes that had a return greater than 0, and only 4 with a return greater of 1%. You can see that we had 1, 3, and 4. So we had some of the best performing indexes on the market last year when everything else was down. So I think that's a really big thing to mention is, hey, no matter what the environment is, Athene's indexes can work for your clients. So what makes a great quarterback? Leadership qualities, an accurate arm, quick feet, great decision maker, track record of performance. So do you go all in on a great quarterback like the Jets did with Aaron Rodgers? Well, the reality is that someone who was great last year may not be great this year. We don't want to put all of our chips in one basket. That same thing goes straight to these indices as well. We don't want to put all of our eggs in one basket, right? So how many advisors go all in on the best performing index of last year? It's a classic mistake that many advisors make. What we really want to make sure we're focusing in on is diversification. We want to make sure your clients are in the right places over time, and we're not trying to time the market, and we're not looking at what Backcast does. We want to make sure we're forward thinking, because the future performance may not be there on an index that worked in the past. So like I said, we have indices that perform year in and year out. You'll see right here, we have great participation rates, great average returns. And again, we're constantly towards the top of our performance. So this is a quick look at the historical performance of our indices currently. Now, this is factoring in the participation rates on these. But how do we know which index to pick, which index to work with, right? Now, if we look at this, they're all over the place. We don't really know which one's going to be the best one. So in the past, before we launched our new index options, I would have run you through our efficient frontier research. In the past, we actually had our actuaries go out and plot out 44,000 different index allocation combinations and charted it on the efficient frontier, basically a risk reward continuum. And what we found out is none of our indices on their own actually fell on that efficient frontier, that dark blue dot right on the top line there. None of our indices actually fell close. We had a couple who were, close to, but, no cigar, right? So what we did is we said, hey, let's put out a conservative, a moderate, and aggressive allocation. We'll have a couple different blend opportunities for the clients. And then, we'll see which one's going to work best for them. Well, we did that, like I said, conservative, moderate, and aggressive. Check that out. Don't try and time the market. Well, we launched these new indices, so we can't use that same research, right? And what we found is actually a couple of our indices that currently actually fell on that efficient frontier. They were built with the efficient frontier in mind. Well, so now how do we decide which index to pick? So what we did is we actually went out and we made a target blend. It's a diversified target blend. It's basically a 60-40 split between multi-asset indexes and equity indexes. And the reason we went with that 60-40 split is what we found is on average, the multi-assets are going to kind of chug right along, churn right along, and give us the production that we're looking for, but it's not really going to pop and give us those big numbers. Whereas the U.S. equities on any given year, they're more likely to, have a down year, but they're also more likely to have a hit year where they really hit and pop. So we want to make sure we give our clients the opportunity to, really get that pop, while also making sure that they're still chugging right along and hitting those beats as we go along through the contract. So, if we compare this to the traditional S&P, you'll see on average, we're looking at just under 7% return, an equal allocation, just under 16, but with that diversified target blend, closer to 17. Now, again, this is with backcasting and with our current participation rates. So we certainly don't want, anyone anticipating a 17% return year in and year out. However, the story does speak for itself, where on average, you can get better returns doing it this way and diversifying it out. So what we actually did is we made it really easy to use this preset. So on our Performance Elite, we've introduced what's called the strategy preset. And why we did that was for a couple different reasons. One, we want to ensure that more people were using that diversification, and we didn't want people, putting all their eggs in one basket and ultimately having a bad experience for themselves and for their clients. Number two, ease of use. We want to make everything nice and easy for your clients and for you guys, where you're not having to go in and year out, pick this, pick that. And then the third is going to be some personalization. We do have some ways to customize throughout. So what is that strategy preset? It's that same 60-40 blend I was talking about. So we're going to put 20% in the UBS, 20 in the AI Go, 10 in the Apex, and then 20 in the BNP MAD 5. And then on top of that, we're going to have 15 and 15 in our two FC indexes. So year in and year out, the way the strategy preset works is, let's assume that in this scenario where there's just shy of $4,000 crediting, let's assume that all of that came from just one index. Well, at the end of the year, instead of leaving it, chunked up inside that one index, we're going to rebalance everything so there's a fair split across the board to help maintain that same diversification year in and year out. Now, again, we do have three different strategies here. We have a conservative, a balanced, and then what's called a growth strategy. The conservative strategy is going to use all 1 year bucketing. And then by doing that, it's going to allow the client a better opportunity for, taking withdrawals, which is why it's the conservative bucket. Then we have the balanced, which is going to automate some laddering strategies, which to me is a huge win. So we're going to start out with 1 and 2 year strategies and then diversify the 1 years into 2 years. I'll get into that in a second here. And then the third one, the growth, is going to be the same thing as the balance, except with the Performance Elite, we have the ability to buy up the participation rates for a small fee for the client. And then by doing that, we can get the client higher participation rates, but we're going to do that same laddering strategy with the 1 and the 2 year strategies. So this is, again, how it looks like. So that same 20, 10, 20, 15, 15, 20. Well, if we do the balance for the growth, we're going to split that in half between the 1 and the 2 years. Now, what I was talking about with the laddering is the way this is going to work is at the end of year 1, when the 1 years come due, we're going to switch those 1 years into a 2 year strategy. Now, remember, we're going to do this on the back end. So there's going to be no additional manual labor by you. This is just going to be something that we're going to take care of for you. Ease of use is a big selling point with this. And basically, we're going to default to a laddering strategy where the client's going to get crediting every single year. However, they're going to be getting crediting on a 2 year basis for each half of the bucket, which means that we're going to use the higher participation rates for each of the clients. Now, this is a huge win where the client can get those higher participation rates, higher returns on average, while still maintaining that annual crediting, because that's the big fear. That's the thing most people don't like about those 2 year strategies, right? Well, my clients really want to see a credit every year. Otherwise, they start to get worried. They don't quite get it. Well, if we can help make sure your client's getting that crediting every single year, while also ensuring that they're getting better crediting, it really feels like a win-win for everyone. And then the really cool thing is as we kind of approach the end here, we move that second 2 year ladder into a 1 year ladder. So at the end of the renewal period, at the end of the surrender period, all the client's money is cashed and they have hit all of their crediting, and that money can be moved into a new account. So it's a really great deal for all of your clients. Now, this is super simple to illustrate on our software. All you do is you're just going to go in, click that strategy preset button, and then, pick which one you want, the conservative, the balanced, or the growth. Now, clearly, with the amount of time I spent talking about the laddering strategy, I clearly am a big fan of that balanced allocation set. I think personally that is really kind of where our strong suit is. I think that's where we shine best, is with those 2 year strategies and with that laddering. One thing I do want to note is when I said there was customization available, so you can actually put, say in this scenario, 65% in the strategy preset, 10% into the S&P, and then 25% into the fixed. So what that means is basically we're going to reallocate that same 65% chunk every single year, and then everything else is going to get reallocated into the 10 and the 25 every single year. So we're rebalancing it for you and for your client. And then by putting it in the fixed bucket, say your client is going to take a withdrawal, we're going to default to withdrawing from that fixed bucket first. So that means they don't have to worry about, we're going to miss out on this 2 year strategy, so that's not going to be a good fit for me. Well, now we have a smaller portion in that fixed bucket where we can pull from those assets instead. So again, it's a great win for you and for your clients here. Then on the application process, again, just as simple, 1 click, conservative, balanced, growth, and then you just decide, how do I want to allocate it? Do I want it all in the conservative and then some in the, the S&P, some in the fixed, or do I want it all in one or the other? So it's very simple. It's a pretty exciting thing, and I'm hoping this is something we bring to our other product set as well. Now, on top of that, we do have some great new resource centers. I'm not sure if you guys have been to our website, athenconnect.com, but if you want any further information on any of our index options, even if you're not currently appointed with us, you can go to athene.com/index, and it's actually going to take you to our index page, and it's going to give you all the details you would want on all these indices. It's a really cool thing. This is going to be kind of a quick look at that and how it works. So what we'll see here is you're just going to click on that products tab once you're on Athene Connect. And on the bottom right, you'll see it says Index Resource Center. So we'll click into that. And then from there, you'll be able to see, like I said, you can click into each individual index. And then at the bottom, we have some great insights, which are just kind of more general information on, custom indices in general, as opposed to specific to each index. However, let's say you do click into the index. In this specific example, we went the S&P 500 FC. You can see the ticker at the top, what asset class it is, when it went live, what the current volatility target is. So you have a client who's asking about it, and you just want to give them the quick beat. So there's a quick overview right there, the key features about it, and then you can see the live performance. So I actually took this screenshot in 7/22. That was just a couple weeks after we launched this new project. But you can see we can get that live tracking, that daily tracking basically, and really see what's going on with each index and have a really solid idea of what's going on. On top of that, you can actually go in and see, hey, I want to see the most recent 5-year period, the most recent 2-year period, or maybe the best or the worst. And you can, see what that graph looks like, see how it's performed over a multitude of different options. And then you can actually click in straight to the website of these indices, straight to the brochure, straight to the fact sheet. So you can get anything you want from these indices right here from our page, which is really exciting. So just one thing to keep in mind, guys, there's never been a better time to sell a fixed index annuity. You have concerned clients with the volatilities of the banks, right? UBS. Zeros you hear, your clients can't lose any money with an FIA. And then with the current interest rate environment, we've never had higher participation rates or premium bonuses. So it's a really great time for any and all of your clients. And then on top of that, you guys have chosen the best partners to help you climb any mountain. Like I said earlier, DMI is fantastic to work with. I really sincerely enjoy working with these guys. They're always a great deal to be around. And, one other thing I want to touch on here is we do have some great producer incentives. It's getting a little bit towards the end of the year for this year. However, I imagine we'll have a similar incentive next year. And currently what that incentive looks like is this. So we have a top producer bonus where at $10 million, we will pay out a $50,000 bonus. At 15, it'll be another $50,000 bonus. Then at 20, it's 100, and then another $50,000 bonus for every additional $5 million in sales. Now, this is only for IMO producers. So if we have any registered producers on, unfortunately, that's not something we're able to do and work with. So to qualify with that bonus, everything must be in good order by the 31st, and then payments are set out after each milestone is hit. But again, this is maybe a little tough for the end of the year this year, but it could be something to start thinking about for next year as we kind of get things rolling. So on top of that, we're doing international trips now. So this year, any of our top 50 producers are actually going to be going to a 5-star hotel in Paris, and they'll be getting to celebrate that there. And again, I would imagine we'll be doing another similar trip the following year. So you may want to get geared up and ready to go for these. So that is all that I have. If anyone has any questions on anything we've covered here, please throw it in the chat. I'm happy to answer whatever I can here.
We do have one question.
Yeah.
Tom would like to ask, can I add a client to the contract after it's started without resetting the surrender period?
So we would want to be adding an additional owner in this scenario. I would have to double check with our processes. I'm not 100% sure as I work on the sales side, not so much, the other side of things. But I can kind of look into that. If you wanted to shoot me an email, Maureen, and I can, dig a little deeper.
And then Tom is replying, sorry, additional funding, not a client.
Oh, gotcha. So no, unfortunately not. All of our policies are going to be single premium only. So unfortunately, we would not be able to add any additional funds. Now, the one caveat is our fixed rate policy, our max rate, our MIGA is going to be multi-premium. However, for any of our index products, they are not. And that is simply due to our pricing model. It's really difficult to maintain our rates and make sure our rates are as high as they possibly can be without, taking a hit on those additional premiums. So that's kind of why we've shied away from that.
Is that it, Maureen? As far as
Let me just double check. Yes, that is all.
I have one for Alex. I want him to participate in the survey. Alex, what breed of dog would an annuity be? A Jack Russell, a German Shepherd, a Poodle, a Golden Retriever, or a Pit Bull?
Jeepers creepers. I kind of like German Shepherd here. I'm trying to read all the pieces, the bits on that back end here. Currently, German Shepherd seeming like the best. Golden Retriever, always a good option.
But yeah, I kind of like German Shepherd myself. But hey, Alex, it was a great presentation, and I'm sure people have a lot of questions, and I would say we want to direct those to Derek. And I'm going to share Derek's information, his contact information. But Derek, I just wanted to ask you if you had any final thoughts before we.
Yeah, I mean, I think, as I stated in my opening remarks, as I talk to agents and advisors, they're looking for, what's the competitive offering out there, and what are some tools that can best help them to find that. And some of the things that I wanted to highlight, and some of the takeaways I had was, first, the renewal rate history that Athene has. I mean, they're some of the best that we see out there. Their renewal rates, they're not jacking around with those participation rates, and right now they're at all-time highs. And then I think as well, a big part of this presentation was the innovative indices that they have, powered by AI and designed for fixed indexed annuities. That's a really key component. These indices are not just some indices that they found out there. These are actually designed for fixed indexed annuities. And I think as an advisor or an agent, I think that strategy preset rebalancing is a very, very fantastic tool. Makes your job easier. You know, it's a question that I field a lot from advisors as well. Like, well, what indices should I put these guys in? I don't know. You know, and just like we talk about clients being well diversified within their portfolios, and an indexed annuity can be an important part of that diversification within their overall portfolio. It's also a critical thing to be diversified within the indexed annuity as well. And that strategy preset rebalancing tool is fantastic. And then lastly, you know, what Alex touched on is there's never been a better time to talk about fixed indexed annuities with all of the uncertainty that your clients are seeing right now. You know, zero can be your hero. And with these tools, these indices that Athene brings to it, there's never been a better time to talk about fixed indexed annuities, and we'd love to help you with that here at DMI.
Thank you very much, Derek. I appreciate it. And again, Alex, thank you. Maureen, thanks for corralling all the comments and questions. And I'm just going to share Derek's information here. So yes, please reach out to Derek with any questions or requests you have. Also, just be aware that on dmiuniversity.com, we've got a lot of great information about programs that we have running, including also marketing programs that can help you become more perceived as like a specialist in your community, as opposed to just a generalist. So if you want to learn about how to utilize Social Security more in your retirement planning conversations, that's one thing you'll find at DMI University. We've also got lead generation programs that are available, and a whole host of other ready to go DIY marketing programs for you to utilize in your daily business. And a lot of those questions, or a lot of the questions that those marketing programs create, have answers that Athene's products can provide. So, you know, I think I think it continues to be, DMI University continues to be a great resource for agents that are looking to stand out. So, and then if you're a licensed DMI agent, there is so much more behind the door for you to see. So with all that being said, guys, unless anybody else has any final comments, I think I'll end it there and just thank everyone for attending today. Really appreciate it. Everybody good?
Awesome. Thanks, Alex.
Thank you, guys.
Hey, thank you, guys. I appreciate it.
Thanks, Alex. Thanks, Derek. Thanks, Maureen.
You bet.
Bye, everybody.
Bye-bye.